Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that continued just play out of that bear flag that we were talking about last week and did correctly predict here at Alpha Commission. Guys, what I want to do, however, is take a look at the Bitcoin CME professional chart. Now that this industry is professionalizing, we should pay attention a little bit more to these kind of professional trading concerns. In particular, we've had our eye on this CME gap here around 39.7 to approximately 40,300. And now that the Bitcoin 24/7 exchanges has essentially played out their bear flag, there could be a little bit more to go. But now that it's played out, we are taking a look to see if the professional exchanges can flip this CME gap into perhaps some strength. Now, what is the concept that I'm using here? Well, we do have the neutral point on the two-day chart, and I'm using the 2-day because that gap extended all the way through the 2-day, and the 2-day does close in a day and 2 hours, and so essentially we can consider this gap to be filled. And now, do the professional traders want to take it back up for perhaps a mean reversion to the 2-day volatility pivot? Currently, the daily volatility pivot is under us, which suggests the possibility of some supportive price action as we have reverted down to the downside here. But although I don't think that the downside is necessarily over, and I'm not predicting some type of reversal on the chart, I am considering that we do have this, what appears to be a broadening descending wedge here, which typically does have a target to the upside. Usually it's breakdown candle, and we might target this fair value gap here at 43,900. We might target the 2-day volatility pivot right here at 43,240. Should we be able to flip the neutral point at 40,380? And what this would look like on a 2-day basis is, maybe we could tag our lows here, fill in a little bit of price action at the bottom, and then we flip the neutral point out of this broadening descending wedge, and then maybe just create some bullish structure to tag up here, fill in this gap, or at least tag the pivot, and then play it from ear at that point, as we do have this rather large, bearish order block over our head. However, we are currently bouncing off of a bullish order block, and we don't really lose the energy behind our move here unless we're under 37,000, and then definitely under 35,000. So there is the potential for some type of supportive price action in our current neighborhood, and we do have a bullish pattern as well as potential targets to the upside. Now, what might this look on a smaller time frame? Let's jump down to the 4-hour, and here you can see that pattern that I'm working off of. We can consider it a broadening descending wedge, or we can also consider it perhaps some type of janky falling wedge here, where perhaps I just extend it out like this, and you can see that we could have potentially 5 drives here. 1, 2, 3, 4, and there's our 5th drive with perhaps some type of hourly or short time frame CME gap just to kind of getting filled down here. And should we find support on this fair value gap area and flip it, then we could be considering that potential mean reversion here. Additionally, if we go back to the 2-day, we can see that we do have our 21 EMA overhead, and so there is a potential for us to break out of this formation, given that we are likely to at least tag this 21 EMA, and that could find support above the neutral point, which then would put bulls in charge, assuming that they can find their footing on top of this formation. So call this structure whatever you'd like. We have an implied measured move somewhere between 42,700 to potentially that $44,000 area, and I'm going to be looking out for this on our next bounce and looking to see if we can break out of this wedge. Now, this is a very impulsive move, so I wouldn't be shocked if we do push deeper. That would be probably considered some type of type 2 return, and then on that I would be looking for some type of bullish divergence on the RSI should we end up dropping deeper than our bounce point over here on that fourth wave inside of the standard falling wedge that we were just looking at. Guys, I think I'm going to wrap it up there. Again, we are just kind of approaching this supportive area. We do have the potential for a mean reversion to the upside. I'm not talking about a reversal in this chart back to our all-time high, but I am considering at least some type of mean reversion. And anything from the 2-day down is giving signals that might be possible, whereas the higher time frames are looking pretty exhausted, and they may want to have a little bit more of a deeper pullback and are probably going to have their say later on in the month. Guys, that's your alpha for the day. Stay safe and happy trading.